Hello, I'm Carolyn Herbert from the Finance News Network, and joining me from Hall Global Value is Deputy Chief Investment Officer James McDonald. James, welcome to FNN.
Thanks, Carolyn.
Now, can you start by giving us an introduction to the fund?
Yeah, sure. Hunter Hall was established in 1993. We've been around for a while. The listed investment company Hunter Hall Global Value Ltd was established in 2004. We're a global fund manager, so we look all around the world for attractively valued companies, mostly small and mid-cap companies where we meet the management and we hope we can understand the businesses better than the market.
Now, you've posted some impressive results with an after-tax profit of around $30 million. What do you attribute this success to?
Yeah, sure. Well, we were very pleased with our result. As you said, $30 million, and we delivered a total return to our shareholders of around 20%. And that really came from three factors. Firstly, the underlying portfolio returned a return of around 12%, which we were very pleased with because the MSCI World Index was flat over the period. We narrowed the discount the shares are trading at to the net tangible assets from around 15% to around 5%, and we paid a 6.5 cent fully franked dividend.
Taking a look at your dividend, as you say, 6.5 cents, do you expect this level of income to continue?
Look, while the profits are there and the reserves are there, we hope to continue to pay out 6.5 cents in future. We paid out 3 cents in the first half, and there was a small increase to 3.5 cents in the second half.
Now, taking a look at the global markets more generally, there is a lot of uncertainty at the moment. So how do you manage this?
Yeah, it is interesting because if you just step back, we've got these three huge deflationary forces in the world. You know, we've got technology change, ageing populations, and the rise of China with lots of cheap industrial products being pumped out all across the world. As a result of that, interest rates have been falling everywhere. There's been huge increases in debt, both government debt and private debt. We've now got 40% of the world's bond markets with negative yields as a result of all of that, which we think is quite worrying. So our strategy is to have a sort of a barbell approach where we've got 20% in cash, 20% in cheap gold miners, and then 60% of the portfolio in undervalued global shares.
Now, taking a look at the fund's position in gold stocks, why do you like this sector and what sort of themes are you seeing play out?
Yeah, look, as I mentioned before, we've got 40% of the world's bonds with negative yields. So it's a very troubling backdrop. Central banks don't really have a lot of room to manoeuvre and they keep basically printing money. So we think that's an attractive backdrop to own gold. Once the argument about not to own gold was it didn't generate any yield. Well, that argument's disappeared now, and people all around the world are investing heavily in gold. The sort of gold mines we're attracted to are these companies with very low cost of production. They're quite cheap. All of our holdings are trading on single-digit PEs, and we've taken a portfolio approach there with 4 names: St Barbara, Doré, Bidell, and Blackham Resources.
And finally, James, taking a look at the strength of the market at the moment, where do you think the opportunities lie in the future?
Yeah, look, as I said, we're a global fund manager. There's always interesting ideas all around the world. In Australia, another name we like is Certex Medical, which has 3 very large clinical trials reporting over the next 12 months, which we think will be a strong catalyst for the company. They have about 2% penetration of the world liver cancer market, and we think these trials will really allow them to step up that level of penetration. In America, a company we like is Lumentum, and that makes optical components for telecom networks. There's very strong drivers in the optical market at the moment. China's building out fibre networks to link up houses. In the US, Verizon is doing a similar thing. And then you've got Google, Facebook and Amazon building out data centres and connecting them with optical networks. So 3 drivers, and this company Lumentum we think is very well positioned to capture that growth.
James McDonald, thanks for the update.
Thanks, Carolyn.